Welcome to JM Financial Mutual Fund's Equity Outlook. In this short video, we would take a look at how different economic and market factors behaved in the recent past. We would also look at our view on the Indian equity markets, which may in turn impact the positioning of our schemes. The Nifty index was up by 7.9% for the month ended December 2023. The Nifty Mid-Cap 150 index and Nifty Small-Cap 250 index underperformed the large-cap indices and were up by 7% and 6% respectively. Amongst sectoral indices, Nifty Energy, Nifty Metal, Nifty PSU Bank were the top performing indices, whereas Nifty Pharma, Nifty Media and Nifty Auto were the laggards. Foreign institutional investors were net buyers for the month of December 2023. Net FII inflows were INR 58,498 crores. Domestic institutional investors or DIIs bought stocks worth Rs 12,942 crores, whereas mutual funds were net buyers worth Rs 23,895 crores. Global indices ended the month of December 2023 on a positive note. Dow Jones and Nasdaq were up by 4.8 and 5.5% respectively, and the FTSE 100 was up by 3.7%. The Indian Volatility Index, or the India VIX, saw an increase in December 2023. It was at 14.5 compared to 12.69 in the previous month, up by 14.3%. The Chicago Board of Options Exchange Volatility Index saw a decline in the month of December 2023 and was at 12.45 as against 12.92 on the previous month, a decline of 3.6%. Nifty 50 PE is now trading above one standard deviation above the mean PE. However, it is still 9.41% below its peak. Nifty Midcap 100 PE is trading one standard deviation above the mean PE. However, it is still 14.7% below its peak. 2023 will be remembered as a year of investors overcoming volatility to end the year with significant returns. It was the year of small caps and mid caps outperforming large caps. The returns for the BSE mid cap and small cap indices were double that of large caps, 46% versus 23%. Most of the divergence in returns started from May 2023 and has not reversed since. The animal spirits in the market were on the back of projected growth in capital formation, corporate, government and individual. Many government-owned companies now have defined growth plans, which has given additional confidence to investors. And these returns came through when the world was continuing to face trade challenges, growth uncertainty and war. The central bank's war on inflation appears to have worked, at least for now. Inflation across all regions has cooled off considerably. This decline in inflation promises to hold for the next few months, which could be the reason why the Federal Reserve Chairman has turned more dovish on interest rates. India's economic growth is robust, with the last GDP reading at 7.6% YOY. RBI anticipates the strong growth momentum to continue, led by higher investments and sustained private consumption, and thus has revised the growth projection for FY24 from 6.5% to 7%. Manufacturing continues to be one of the key drivers of growth. It is expected that the growth may continue to surprise positively, as our corporate interactions suggest a groundswell in activity. Interest rates could decline if benign inflation holds. The next key event which will impact India's economy will be the elections due in the US. The US economy is becoming more domestic than before, and imports are being reduced in favor of domestic manufacturing. However, most of the factories that are being built are for high-end semiconductors, which may not create a high number of jobs. Whether the US economy becomes more protectionist in the run-up to the elections and post-elections remains to be seen, but in all probability, US will continue to increase domestic manufacturing. This trend could add to inflationary pressures by way of wage increases. 2023 was a resilient year, with growth coming through despite global headwinds. India's focus on internal manufacturing and capital expenditure promises to be a multi-year phenomenon. Elections in 2024 may induce some volatility in domestic markets. US elections will be a wild card towards the end of 2024 and may create some panic in the market depending on who the next president is. Regardless, the US economy is increasing its internal share of the economy, and that could be inflationary in some aspects. Central banks' fight against inflation has worked for now, as China's slowdown has helped cool commodity prices. The hope is that China continues to reduce its commodity intensity, and this could help India and other countries invest in infrastructure without creating an inflation-induced growth. We're less optimistic on this prospect, as the commodity markets have been far more consolidated than in the past, and increase in global demand could be inflationary. The decline in crude oil prices has been a welcome relief for India, as it could reduce our trade deficit. As of now, Based on inflation data, there is scope for yields to decline and borrowing costs to reduce. India has maintained a balanced approach in this regard, and hence we do not expect interest rates to decline considerably. Inflation in India has been sticky due to food prices as compared to other developed economies. Domestically, over the past few months, the small and mid-cap stocks have become expensive and are trading well above their 5-year averages. India's profit growth was weak during the 2010 to 2020 period and was below nominal GDP growth for the better part of that decade. What we are experiencing now is a mean reversion as regards earnings and valuations, discounting this a little ahead. That said, there are many expensive stocks which could underperform when growth does not play out. There has been some increase in volatility in recent times, indicating that there could be increased nervousness about future outcomes. We are cognizant that the global environment is not too stable, with many moving parts and unknowns. This could create bouts of volatility, which could be used as an opportunity to add to existing positions. India's growth opportunity is robust and offers a decadal runway. With global outlook improving, combined with favorable demographics in India, it is recommended to have continued exposure to Indian equities.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.